Everyone to today's spaces. For those who don't know me, my name is Dan Kang, head of investor relations here at DeFi Dev Corp. Thank you for joining us today. It'll be just Parker and me. We've got the rest of the team traveling or caught up in meetings right now. So we'll be discussing our recently announced $125 million equity raise, why we structured it this way, how we intend to use proceeds, what it means for shareholders, and just answer any outstanding burning questions on this. So joining me today is Parker White, our COO and CIO. So we'll go over the highlights, answer some of the questions we've been receiving, take any live questions you guys may have. Feel free to send questions. You can either send them over DM, or if you'd like, you can email them to dk@defidevcorp.com, and we'll do our best to get to as many as possible. Before we begin, a quick note. Today's discussion may include forward-looking statements. These involve risks and uncertainties that could cause actual results to differ materially from those projected. For fuller discussion of those risks, please refer to our most recent SEC filings. We don't undertake any obligation to update these forward-looking statements. So, with that out of the way, Parker, welcome. Let's just answer first one right away. Why raise $125 million right now?
So, it's no secret that there's other vehicles coming to market. There was one that was announced on Monday as well. We know those guys pretty well, and so we wanted to, we think to a degree that size matters. And so while I think the goal shouldn't be to be the biggest, it should be to, be the best in terms of generating SOL per share growth. We think being the, fifth largest treasury vehicle will have some negative impacts from a publicity and ultimately, publicity and brand, and then ultimately liquidity standpoint. And so, there was a lot of investor demand for these vehicles, or is a lot of investor demand for these vehicles right now. And so we wanted to jump in and, effectively capture some of that demand and really, in a single slug, build our balance sheet in a meaningful way from a just kind of raw number of SOL perspective.
Yeah, I guess I would also add, I mean, I think we often get or we have gotten the question over the last couple days, like, why raise $125 million via this structure versus the ELOC, right? And the thing to remember with the equity line of credit is think of that as like a faucet that we can turn on or off. It's very unlikely, incredibly unlikely that we could actually just go and raise $125 million via the ELOC in one giant slug without materially impacting the share price, right? You guys can do the math to figure out what that would what that would imply. So I think that's an important consideration in this. But with that, I mean, I think it's probably important to get a little bit into um, maybe like pricing and structure. So let's talk. Let's start with structure. Why this structure, Parker, versus other options? I mean, we could have done convertibles. We could have done just straight debt. Why did equity here make sense?
Yeah, great question. So, if you look at our balance sheet, we do have we do already have some debt instruments on there. We've got the SOL loans, which I think we'll talk about. We've got the forwards, and then the largest one is the existing convertible bonds, the two of them. And so wanting to be cognizant of our leverage ratios. And so, a large equity raise does help to equitize the balance sheet, meaning you add more equity capital and help to kind of dilute the debt down and reduce the leverage ratio. So we think kind of de-risking a little bit at this point in the market makes sense. Um, so that's why to do this instead of a debt raise. Um, there's other ways that we could have structured the raise here. So one of them would have been, we could have potentially sold immediately registered shares. So these would be like shares kind of on an overnight basis, and maybe sold for less of a discount. But the problem there is that folks immediately have the right to sell like the next day, and typically will sell a large block immediately the next day. So we didn't really like that dynamic. The other thing that we could have done is we could have done a raise and added warrants on top. You'll see these, warrants added in a lot of raises. Um, and you'll see some teams out there saying they're going to raise X amount, but half of it or even more is in warrants. And warrants are basically like call options. You're selling call options. And so as everyone knows with call options, it's most prudent to wait until options expiration date to exercise because if you exercise beforehand, you delete all that options value, that options premium with the time value component, the theta component. But the problem with selling warrants is it's at a fixed price. So, and a lot of these are 3-year or 5-year warrants. And so we do have some warrants on the balance sheet from our very first deal, but now they're a relatively smaller amount. We've diluted them down with existing, the subsequent fundraisers. But the problem with warrants is they're done at a fixed price. And so what happens is if the stock surges, because typically the warrants are issued at a premium, but if the stock surges because Sol is surging, you could run into a scenario where this strike price on the warrants is actually at a discount to NAV. And it could be a significant discount. It could be at a 50% discount to NAV. And the company has no control over that. And so what you could have if a giant, if half of your capital stack or 100% of your capital stack is covered by warrants, you could see a scenario where the stock trades at a 50% discount to NAV and investors are putting cash into the company and massively diluting SOL per share. And so you could see pretty negative SOL per share growth. And so we did not want to have any possibility of that type of situation. And so we chose to do this deal as a straight equity deal, no warrants, for that reason as well. So those are some of the different options available to us and why we ultimately went with the option and structure that we did.
Yeah, that's was a helpful overview. Let's now maybe peel back the second component to this, which is the deal was priced at a discount to basic NAV. Doesn't this mean that a deal like this is automatically SOL per share dilutive? Why did your press release say that you expect this to be NAV per share and SOL per share accretive?
Yeah, great question. So um, there's a number of buyer or sellers out in the market for locked SOL, discounted locked SOL. We've been talking to the foundation about their LOI program, and we know those folks well. And there's lots of other buyers as well, or sorry, sellers as well, that we can buy from. In fact, we have a signed agreement with a buyer. It's non-binding, but a signed agreement to buy a whole bunch of locked SOL from this one seller. And so when you buy that stuff, typically that's done at let's call it a 13, 14, sometimes even 15 or greater percent discount. And so when doing it at that discount, $1 buys you more than $1 worth of SOL. And so even if we raise at a slight discount to the headline NAV, by using that locked SOL, this still becomes not hugely, but slightly SOL per share accretive. Now that's in the short term, like immediately with the numbers. And it fluctuates a little bit based on the price and when we invest, deploy all the cash and such. But the other thing that it does, we think, and we hope, is that by getting more equity shares out into the market, by growing the balance sheet. That will increase liquidity, which will increase our ability to run the ELOC. And as long as the stock is trading at a premium to NAV and a decent premium to NAV, if it's larger, we can also then run the ELOC to raise additional accretive capital. So to the extent that this raise kind of jump starts or catalyzes, in the medium term or even somewhat short term, to the extent that it catalyzes more liquidity and maybe more attention, more brand awareness, more NAV multiple expansion ultimately, then kind of when taken in aggregate, this deal could be seen as pretty meaningfully SOL per share accretive, medium and longer term. And so we kind of think about it in those two ways, not just the immediate impact, which is positive to a small degree, but also the kind of medium and long term benefits that should help us grow it, you know, more and towards our targets by mid next year and out to 2028.
Yeah, it's a good summary. The way I was phrasing it for investors a lot over the last week and change when we were chatting with them was like uh more scale means more volume means there's more scale means more attention means more volume unlocks the power of the ELOC, right? That's sort of the logical thought process behind that. The other thing I would add for what it's worth, um, we kicked this process off think when Soul it actually was like at $180 or it dipped like just below it, right? So if you go and you plug in, 176 or 177, wherever it was, sort of not too uh long ago when we had actually initiated a lot of these discussions, our actual NAV per share, disclosure one on our website was under $12 at that price. So it's just something to keep in mind. Is I think a lot of folks are like, "Wow, this thing got priced at such a steep discount," but we obviously had the massive move in Solana towards the end of last week, and accordingly, a pretty massive move in our share price as well, versus when we had initially kicked off discussions. And then, of course, you guys can sort of do the math, and you'll see from us as we go and announce various Soul purchases. But in each of the scenarios that we laid out, depending on how you look at this, whether it's just basic equity Soul or backing out the debt, or sort of like the fully adjusted or loaded basis, our expectation is that over time this will be on an adjusted NAV per share basis, accretive in each of the scenarios. And that is our current expectation. So, um, anything you'd add to that, Parker?
Yeah, I think getting at the discount components. The challenge here with these raises is that they do take a little bit of time, right? You got to get out there, you got to talk to investors, and they want to see a concrete price. They have to discuss with their, investment committees. They have to jump through a few hoops to pull the trigger. And so when doing these investments in such a, volatile name, there's some price risk kind of either way. If the stock had tanked, then we'd be having a different conversation and, wow, this was done at such a great price and, good job, DFDV team. But the challenge is, and we've actually had a number of fundraisers now and fundraising attempts where the stock really moved on a Friday. And in some cases, we backed out of the deal. We just said, hey, look, doesn't make sense. We don't want to raise at that price anymore, and ultimately didn't do the deal. But if you go to market enough and then back out of the deal, so some investors already put in orders, they go to the investor committee, they get it through, they're ready to sign, or maybe even have already signed, and then the company last minute kind of rugs them and says, hey, actually the price moved too much. We don't like it. We're going to stop raising, or we're going to like materially change the price here. Um, it makes you less serious with these types of investors. And so they will, next time you bring a deal, they'll be like, yeah, look, the last 3 times we looked at this deal and maybe even signed, And I'm giving hypotheticals here, not specifics, but um, hypothetically speaking, 3 times this company came to market and then backed out, materially changed the price at the last minute. Like, I don't really want to even bother taking this to my investment committee to get it approved and go through all the legal hoops because, there's a pretty high chance that they're just going to rug once again. And so there's also kind of this investor relations piece to sticking with a price. And, throughout part of the process, you can set a floating price. But as you get really down to it and people are signing docs, they want to see a dollar value. And so you got to put a dollar value. And then, you know, if the stock really moves on one day, and that Friday was, a pretty big move, it's a kind of a tough situation. It's ultimately, not wanting to burn the bridges with a lot of these guys. And we got a lot of TradFi investors that came in, some repeat investors that came in, wrote larger checks. And so if they make money here, then they'll be more likely to continue to invest with us in the future. So it's a little more color on how the discount materialized, why it came out at such a large headline number, but some of the thinking there. The last point that I would mention is, people are frustrated that it was at such a discount, and I fully understand. However, these are not freely traded shares. So investors can't go into the market and sell their shares, couldn't sell their shares on Monday or Tuesday or Wednesday. Now they could short against a position, but it's technically a naked short because the shares are not registered. They can't be used as collateral, so they're having to post collateral elsewhere, and they could get a margin call. They're having to post more and more balance sheet to make sure that doesn't happen. So the process for this, for these shares and the way these things go, these pipes, is you have to publish a registration statement. And we actually have to get a shareholder vote as well, which management controls the vote, so it's a more of a just a process thing. But this takes time. This takes weeks, and so there's absolutely a situation where Sol tanks and goes down to 150 or 110 or something. I mean, I don't know. It's a volatile asset, and in that scenario, the stock price could go it could go below 1250. And so then these investors would be, stuck. Basically, they couldn't trade out of the position. And so these guys typically do demand a decent discount for taking on that illiquidity for a bit. And many of them are also buying shares in the open market and trading shares in the open market, and that's great, and they're fine to do that. But those are freely tradable, and they can, with the click of a button, get out of a position. And so, um, that's another factor that goes into these discounts.
Yeah, super helpful. Speaking of discounts, there seems to be a narrative going on that DFDV and other DATs buying discounted locked SOL may not be such a good thing. Can you maybe talk about uh, whether DFDV and other DATs buying discounted locked SOL is bullish for SOL price? Why or why not?
Yeah, it's a great question. Um, I understand the nuance there, where people think, well, they're not buying spot SOL out in the open market, and lock SOL is not the market price. But ultimately, markets are markets, and this lock SOL is traded OTC by some of the biggest OTC desks in the world, crypto OTC desks, that is. So, um, to the extent that SOL is being acquired and accumulated, um, it's, in my view, positive for the price of SOL. So, in some cases, in many cases, we're actually buying the locked SOL with liquid SOL. And so these guys, these funds, are not necessarily turning around and immediately selling the liquid SOL. They just want the liquid. They want the ability to sell as, maybe um, price above 200 or 225, 250, 300, 500. If Tom Lee is to be believed, Sol's probably going to like 10,000 this cycle, right? So in those eventualities, sure, some of these guys will sell, but they want to be prepared to be able to do that. They also want to be able to borrow against the position. For example, their liquid Sol position, maybe use it in DeFi. There's all sorts of reasons why you might prefer liquid Sol versus locked Sol. Reasons that exclude just straight selling and going to cash. Um, and so I see the concern, and there's maybe a little bit of um, dampened impact, but ultimately markets are markets, and all this stuff is tied together. And I think buying is buying, and is supporting the price, and it's really really tough to take the counterfactual of like, well, if these guys all bought lock or liquid Sol instead, the price would have done X. Um, it's impossible to make that claim, candidly.
Yeah, yeah, interesting. Um, all right, let's move on to next one. How do you protect shareholders from dilution? Parker, maybe this would be helpful to talk about. We've touched on this before, but just our philosophy around running the equity line of credit and MNAV levels, and maybe any loose framework that we have in mind there. Again, knowing these are not like strict guidelines so much as they are maybe guideposts on how we think about it.
Yeah. So, I mean, the obvious one is not running the ELOC when we're trading at a discount to NAV. Um, so, that's we don't really ever plan to do that. I shouldn't say we'd never ever do that, but like this is not a capital raising strategy. This is like an absolute emergency. Like, hey, have to pay some little bill or something. We can run it for a little bit, but like the plan is not to run the ELOC at a discount to NAV. Furthermore, the plan is not really to run the ELOC just at a small premium to NAV because long term we think the stock should trade at a healthy premium to NAV, and that's just because of the underlying growth. So even if you took away all the capital raising activity, if an ETF is yielding, let's say 5%, SOL per share of ETF growth because of staking, and we can generate 10%. We've done a little more than that historically on an organic basis. So taking out all the capital raising activity, just the organic basis, doing the DeFi stuff, running the validators, running validators for third parties, the LST, all these things. If we can do all of that and generate, just a little north of, or right around 10%, we should trade at a premium relative to, say, the ETF at 5%. And so if we're constantly hammering the ELOC at a point oh 0.01, 1.01 x NAV or a 1% premium to the break even, that doesn't, we still think we're selling stock at a discount, basically to like the fair market value. So it's tough to say what that fair market value is. Is it 10x NAV? Probably not. But is it 1% premium to NAV? That feels cheap. Um, and so we are certainly cognizant of that, and um, you know, think about or adjust the amount that we use the lock based on where that multiple is. And as that multiple gets higher, we increase the percentage of daily volume that we run the ELOC for. And as it comes in and gets closer to one, we kind of bring that back and sometimes turn it off altogether. Um, so that's one of the ways that we help avoid dilution. The other way is, of course, avoiding these warrants that I talked about. I think the warrants are incredibly dilutive and can be a, you know, massive SOL per share or asset per share on any of these vehicles detractor. Um, and so really staying away from those helps us keep a cleaner balance sheet.
All right, let's go to our last two here. Um, do you expect more international expansion? Any updates on the Treasury Accelerator?
Oh boy. Um, we're very excited about this. I wish I could share more, but just I don't know, watch international news headlines, closely, set up RSS feeds or something for our name popping up in international filings, or just our own filings. We will have to file potentially some of these in SEC filings as we acquire some of these, shell vehicles, not shell vehicles, but small companies. Um, but we're very focused on this. We're working very hard on this. We've made an offer to somebody to join full time to be dedicated to this. And um, yeah, I'll just say at our our bell ring event ceremony, there's going to be a whole bunch of folks from all over the world there. So I will leave it at that, and hopefully we can do a spaces talking about specific deals, in the very near future. But nothing official to share there today, unfortunately.
As the IR guy, I commend you for not oversharing. So,
And it sucks
um,
being a public company executive sometimes, man. Just was a I was a token overlord or something and just say whatever I wanted.
all right, last one here. What's next for DeFi Dev Corp?
Yeah, so in the short term, obviously, focus is on soul per share growth and continuing to get our story out there. Um, I think, and of course, do the franchises, DFDV, Treasury Accelerator, to launch more of these vehicles. But I think medium to longer term, we see what we're doing as a kind of key pillar or cornerstone to the Solana ecosystem in general. And so you can imagine a world where you've got a DFDV branded vehicle in most major markets around the world. These markets each have their own communities. So I was out in Japan earlier this week. We sponsored Super Team Tokyo. Pretty cool growth there. So they did their first event last year. The organization was set up last year. They had like, I don't know, 20 people at their first event last year. They had 800 this year. Um, and so pretty exciting growth there, but the flavor of that community, the things that they're interested in, the types of folks, builders versus traders versus enterprise folks, it's different in Tokyo and in Japan than in even in Hong Kong or in South Korea, and certainly different than say in the US or Europe. Um, and so our hope is that as we can help launch these treasury accelerators, um, the DFDV brand starts to really become a force multiplier and a force for good inside of each of these local ecosystems where you can picture a scenario where let's just make something up. I'm not announcing something here, make something up. A DFDV Japan run by a local management team um, dedicates a small portion of their budget, maybe a marketing budget, to ecosystem growth. So this would be things like conference support. This would be things like hackathons, startup kind of accelerators, maybe small angel checks into founders coming out of the local market, out of Japan. Um, and as the size of the balance sheet grows and the portion of the size of that marketing budget therefore grows, then there's more and more dollars and soul flowing into the local community from DFDV Japan. This is again just generalizing here, hypothetical. Um, and so it starts to create this pretty cool flywheel where each of these DATs in the local market help to accelerate the growth in the Solana community in each of these markets. And they do it in a very decentralized and locally focused manner. So rather than a single top down organization trying to drive this and set strategy for the globe, it is a local team putting local dollars and SOL to work in the local market. They can tailor it exactly to the best uses for those dollars for the for those investments. Um, and so that's kind of a medium or longer term hope is as we build out this franchise, this kind of constellation of like-minded companies and similarly brand companies, of course. Um, we can start to really become a not just a price taker, but a kind of a price maker, if you will, where we are helping to drive the community forward, bringing more people in, helping to build collectively, and we can really help take Solana to the next level. So that's like what I'm really excited about as we build out this franchise model, and excited to see that materialize over the coming, let's say that takes more like months or years to really start to have that like huge impact that I'm talking about here. But we're already starting to see the beginnings of it, which is pretty cool.
Yeah, yeah, interesting. Um, I don't know. For me, I'm pretty psyched for Friday. Like, I don't know, ringing the Nasdaq bell. For me, I mean, maybe I'm speaking out of my old TradFi hat over here, but um, just like one of those things that is like a finance professional, you sort of like always dream of doing. But I think to tie this to the message you were just giving, what better opportunity than doing this for putting Solana just really center stage, right? If you had told me even a few years ago, right, when we were still at Kraken, Parker, that you were gonna have a Solana treasury company going and ring the bell on the Nasdaq. Like I just wouldn't have believed it, right? And I'm just psyched to
Yeah.
like I don't know, put Solana front and center on the world's biggest stage. I know some people are like, oh, it's not like that big a deal. And I don't know, like when we announced the Treasury Accelerator, I remember everyone took a everyone took a screenshot of the Solana S on CNBC, and they were like, "Oh my God, the Solana S is on CNBC. How crazy is that?" Right? And it's just um, this is going to be that, but even more amplified, right? It's just a huge symbolic moment, I think, for to be positive for the whole Solana ecosystem. So I'm pretty psyched for that this Friday.
Yeah, absolutely. Yeah, and I'll add a little bit to that. Completely agree. And some people saying, "Oh, it's symbolic, and it's not like directly soul share creative. Like I want to see you announce somebody big or like announce concrete that grows soul per share." Um, but I will say that symbolism does actually matter. And if we look at what SBET did, they were the first vehicle to ring the bell. Um, and from some folks that worked on the PR there, they said it was like decently well done, but like they certainly missed on a lot of opportunities. And so some things that we're trying to improve upon. But like, I mean, that was a big moment for SBET, and that really kicked off some pretty meaningful demand, which then allowed them to run the ATM and raise a lot more capital. So we think this could turn into something concrete, immediately for DFDV. We'll see what happens. We can't predict the future. But on the other hand, I think it's powerful for the community. And we talk about the DeFi Dev brand being a supporter of the Solana ecosystem. I mean, when you see the branding, we're going to have the entire NASDAQ tower with our branding. Well, actually, the Solana ecosystem's branding, but like a video that we put up there running for an hour in Times Square. Um, we'll be all over TV with, close to 100 folks from all across the Solana ecosystem. Many of you here are going to be attending. This is not a like DFDV celebration, DFDV party. This is a Solana celebration, a Solana party. Um, and DFDV is just supportive of the Solana narrative. Obviously for selfish reasons, of course, but this is we're kind of calling it a quote, taking Solana public moment. Um, and I think these types of things, this type of symbolism really does matter. And especially for Solana, where, one of the memes is like, hey, we're like decentralized NASDAQ. We're taking over the NASDAQ. Here, we literally are taking over the NASDAQ. Like the DFDV team has the entire NASDAQ event space building for like, 8 hours. And we're doing a party on the roof. of the Nasdaq after the bell ring. Like we're literally taking over the Nasdaq. And so I think that symbolism is pretty powerful and could very well have a short term, if not medium and long term, tangible benefit to SOL per share growth and balance sheet size and all these things.
Yeah, completely agree. And this is, of course, not a commentary on the stock, but I would just remind people, because folks have a short memory, that I think SBET was somewhere around like a $9 stock at the end of June, and they ended up doing the bell ringing. What it was early July or something like that. Like right, and you know people again forget this. Like the narrative on ETH changed so drastically over the course of like the following weeks that I think it began the run up basically up to like almost $40, I think up to like the high 30s or something like that. But attention matters. So um,
Absolutely.
all right, guys. Well, I know we're over time. Thank you so much for joining again. This was recorded. We'll post the recording later on today. Um, for those of you who are making it to the bell ring, look forward to hanging out with you in person. And of course, you can live stream if you cannot make it. And with that, in service of Soul per share growth, we thank you for your support. Take care.